Yahoo reported their earnings after the close on Tuesday, and the stock went down as a result. When we took a look at the numbers, Chris and I were a little bit surprised. They were kind of flat. It was kind of a mixed quarter. There was some good, there was some bad. You know, the adjusted EBITDA was basically flat compared to last year.
Yeah, Yahoo's really trying to turn its core business around, and CEO Marissa Mayer seems to be doing that a little bit here, still trying to struggle on the flat line. Earnings beat, but that was also based on the fact that Yahoo is not including stock-based compensation for the first time, which is a little bit of a head scratcher. But jumping to the top line, you see that display and search revenues fell year over year, whereas last quarter, Yahoo actually showed for the first time in 4 years revenue growth. So it seems like Yahoo's having a little bit of a bumpy time here.
Now listen, that stock is up 60% for the past year. It's trading down just a little, and what Chris and I thought was really interesting is there were reports on Bloomberg for second quarter guidance, and the second quarter guidance was weak. When we looked at the earnings release on Business Wire, we looked at the 8K on the SEC, you know, we just did not see this second quarter guidance. Bloomberg was the only one reporting it, and it was weak.
Yeah, I mean, I'm going to wait to listen to the conference call and see if Yahoo addresses that. But the fact that those revenue numbers out for the second quarter are a little bit weak makes me think that maybe Yahoo is still continuing to bump along the bottom, and things aren't going to get any better until perhaps the second half of 2013.
All right, so Yahoo up 60% for the year, down post their earnings. Intel, just the opposite story. This stock is down 20% for the year, but they were up after they released their earnings, and their earnings were pretty crummy, Chris. I mean, they were down across the board. They had an estimate of 41 cents a share, came in at 40.
Yeah, Intel's really seeing some heavy hate from the PC space. PC sales, as released by IDC and Gartner last week, were even worse than what people were expecting. Intel's very heavily tied to PC sales, so that doesn't surprise me that earnings and revenue fell short of estimates.
I think their lawyer must have gotten tired of writing down sequentially. PC client group down sequentially. Data center group down sequentially. Architecture group down sequentially. Gross margin down 2 percentage points sequentially, down 8 percentage points year. I mean, it's just down. Revenue, $12.9 billion, plus or minus $500 million, give or take $500 million.
Yeah.
Does that bother you, give or take $500 million?
No, Intel really just generally guides within a ballpark, and that 500 plus or million number isn't something that I would expect Intel to ever change, especially as the new CEO comes. We're going to see a new CEO perhaps as early as May's shareholder meeting. I don't think Intel's going to change that. What really kind of concerns me is the gross margin number that fell short of their own expectations that they set last quarter. That means things in the PC space and the processor space are even worse than they saw just 3 months ago, and perhaps the lack of visibility is not a good sign going forward.
All right, well, there is your first look at the earnings for Yahoo and Intel. Chris has got to run to get on those conference calls. Yahoo, a mixed quarter. Intel, just a bad quarter. And I'm Debra Borchardt with TheStreet.